Hello and welcome to another Bitesize Brexit podcast brought to you by MHA Larkin Gowan. My name, as you will know by now, is Chris Scargill, and I'm a business advisor at MHA Larkin Gowan. And we've been putting together a series of podcast-style audios to help businesses through this rather interesting time of transition. Sad to say that right now I still don't know whether we're going to have a deal or not, and Christmas is fast approaching, so how many more of these we will have before a deal is done, one will only know. But anyway, thank you very much for listening in. So we're going to have a general chat today. As I say, this is the fifth Brexit podcast we've got, and that cough in the background means that Laurie is telling me that he's ready to participate, and today's discussion is going to be around the Agricultural Act. Lots of discussion this year around the agricultural bill, a bit of infighting. So I need to know a little bit more about that because it does bring together Brexit matters. So I'm going to bring you in my muddy boots guy, Laurie Hill. Hi, Laurie. How are you?
Hi, Chris. Good to be back.
So good last time we had to do another one.
Exactly.
Yeah. So, I mean, just an important thing for people who are listening and who probably don't know what an expert you are in the agricultural field, as well as being one of our commercial specialists dealing with audits and larger businesses. You are actually a farmer yourself.
Yes, I am a farmer as well as an accountant. You could say I account Monday to Friday and farm Saturday, Sunday, albeit it sort of slightly merges when it's harvest time.
Yes. And so have you been enjoying all the wet weather we've been having of late?
Certainly not. It's a bit of an issue for us trying to get things in the ground, but I think that's a general bit across the industry, and people who've been brave and drilled early in September are probably laughing, whereas we held off on some bits and slight worry, but we'll get there. Yeah. We'll get it in.
Good. Well, fingers crossed for a good season next year, because we're going to be talking about money that is possibly disappearing from the farmers' pockets. So again, as we've probably need to mention right now, which of course that bit of fluff across the top of your lip reminds me that we are in November, so there's a bit of Movember going on with my colleague Laurie. You can't see that on this podcast, but I can tell you it's looking very well done for 17 days. So well done on that. So yes, we don't normally time check podcasts, but I think it's important to know that this is the middle of November and we are still awaiting a deal for the EU and the UK. So Laurie, tell me an interesting fact about agriculture that you've found out in the last week or so.
Well, funny enough, when looking at the agricultural bill and agriculture as a whole and considering self-sufficiency, I was actually reading about the NFU and their sort of report that they had done. And according to them, and based on our UK's production of food, we as a unit of countries would be able to survive until the second week of August, and then we'd run out of food.
Right. So anyone who has bought a year's worth of toilet paper may find they have no need for it in the third quarter of third part of the year because we'll have no food. Okay.
Correct.
Slightly worrying there. So maybe there'll be some toilet paper back on the shelves sometime soon, rather. Okay, Laurie. So this, agriculture has benefited significantly from the EU for a number of years. Significant amount of money involved, isn't there?
Yeah. So the BPS is worth $3.5 billion to the UK agricultural industry. Originally, we joined back in the 70s when it was the CAP, which is the Common Agricultural Policy. And so the agricultural bill, now enacted as the Act, starts off the phasing out of these BPS payments, which starts in 2021, which is next year. And therefore, farmers will start to lose a percentage of their income from 2021 through to 27.
Yeah, and I know we may touch on it again, but this is significant, isn't it? I mean, how much of a drop do you anticipate?
Well, for a farmer receiving 100,000, you'd expect that in the first year they're going to lose 20 or 25,000 odd, just on the basis of the banding that they've set. That's sort of a back of the packet calculation in my head right now. But for the replacement of subsidies that's coming in with the ELM scheme, a recent seminar that I was in discussed this, and the thought process and suggestions were coming out were that ELMs might replace a third of the BPS income. So 100,000 is suddenly down to 30,000, which is, well, in layman's terms, 70,000 drop in income and probably 70,000 drop in profit.
So for a number of farms, that BPS has effectively been the profit. So you are looking at a significant impact. Okay. So what else do you want to tell us about an introduction to what we're going to be talking about today? What's a brief intro?
Well, in terms of the Agricultural Act and what it brings into play is partly the public money for public goods. Yes, we touched on the ELM scenario, but the public money for public goods brings in the fact of paying farmers for environmental movements, for push for the environment, rather than paying them for the land area that they own. So it's a completely switch in the scenario of subsidies.
Yeah. So public money for public good.
Mm-hmm.
So expand on that a little bit, and just remind me, as part of that, what ELM stands for.
ELMS is the Environmental Land Management Scheme, which obviously is, we love an acronym. So apologies for those who weren't sure of what that was beforehand. The system pays farmers, as I said before, pays farmers on a land-based area, which includes an element of greening, or EFAs, which is an ecological focus area. But this requirement has actually been removed for the 2020 return, which was submitted back in May, June time, because it was actually considered that this greening element hasn't actually given any environmental enhancement. So this new system of ELMs that are coming in is really going to push farmers towards being more environmentally friendly in a sense, because these schemes and the tiers that will come in will pay farmers to improve soil structure, enhance nutrient management, create habitat, restore woodland. I know the woodland topic came up in our previous podcast about the future benefits and possible carbon credit market.
Okay, so public money for public good, environmental sustainability. Other than the fact there's going to be a lot less money, it's going to be a lot better. There's going to be a lot of good things for the countryside. So, what's the overview? Short touch on public money for public good. What are the key talking points?
As well as the public money for public good side of things and BPS payments disappearing, a key element is the food standards. This issue did see the Act ping pong, and yes, that is the official terminology, between the Houses, House of Lords and House of Commons, which did cause a bit of a stir because the government kept rejecting it, yet they just promised to maintain standards within their manifesto pledges last year. We wanted to protect our standard of food imports and make them adhere to the UK standards, but the rejection was partly due to the fact of it could impact future trade deals. But the worry is that would also then possibly discriminate against other countries' food standards, and that's against WTO rules, funnily enough. So part of the compromise is that the Trade and Agricultural Commission, which was originally set up for 6 months, has now actually been given a full statutory footing, and will report on every new free trade agreement to support the government maintaining these standards.
Yeah. And do you think farmers are worried?
I think to an extent they are worried, yes. If you think of livestock farmers, and without a deal, in terms of looking at in a bigger scenario, we as the UK are the 5th largest producer and 3rd largest exporter of sheep meat. So in numbers terms, we produce around 300,000 tonnes of lamb and mutton every year, which is exported to the EU. And we're obviously within that, 88,000 tonnes of sheep meat, which is valued around 370 odd million. And a no-deal Brexit would automatically add 12.8% on top of that, plus another slight percentage as well, subject to what the cuts were, which equates to my broad maths around another 48 million, give or take a few 100,000, which is clearly a significant level.
Yeah, it is, and a big impact on some of our farmers. So a likely move is going to be welcomed, regarding this change. And I know that the NFU is a key lobbyist. So what's going on with them?
Well, the NFU obviously are very glad of the fact that this Trade and Agriculture Commission has been brought in. It obviously allows the scrutiny of any new trade deal, and allows them to have not necessarily a foot within it, but allows them to push for certain elements within any trade deal. But if we go back to the Agricultural Act and what it brings in, we understand obviously there's 3 tiers within it, and this is slightly skirting around your question, but
carry on.
The 3 tiers that are being brought in within ELMs as a result of the Agricultural Act, and what is unclear at the moment for farmers and landowners is to how they're going to be remunerated. There's still no clear detail from DEFRA or the RPA as to how anything will be calculated. So the frustration is for farmers and for myself and my family is that we have no idea as to what the future will hold with subsidy payments. Yes, the government's agreed a multi-annual financial assistance plan, which is I think it's every 5 years, which will benefit farmers for future clarity. But at the moment, all we know is there's 3 tiers. Don't know what the payments are going to be like, and for BPS, all we know is the reduction in year 1. So it creates a difficulty.
Yeah. Okay. So, what would your advice be to farmers right now?
My advice would be you really need to understand what you want to do going forward. You need to understand your business. You need to understand your cost base, what your profits are. You need to consider, am I actually going to want to partake in these ELM schemes? What tier am I going to want to partake in? What tier can I partake in? From the perspective of the current countryside stewardship schemes versus what the uptake is wanted, or what the DEFRA wants the uptake to be within ELMs, the aim of the scheme is to bring in 88,000 farmers by 2028 for ELMs, whereas the National Audit Office thinks a more reasonable target might be around 55,000. But we have to bear in mind that this 55,000 is more than 3 times the current participants in the available schemes as of now. So clearly work has to be done, because from a personal perspective, our reluctance was around the red tape and hoops to jump through, along with frustration of delayed payments, which obviously is a devil for cash flow management.
More red tape for farmers. Going back to your pet hate of a number of people not wanting to be stuck at a desk. They want to be out in the fields working and getting on with the farming side of things.
Correct.
So the agricultural side of things, we need a sustainable industry. It's inevitable that some government support will operate through ELMs. What would we consider that it might see farmers coming up for sale in the future? Do you think there will be that?
Yeah, I wouldn't put it past the fact that farms may come up for sale. We know that some people will see this scenario and bury their head in the sand and hope for the best. Others might think, actually, no, I might take a lump sum BPS, which is going to be allowed for those wanting to retire, and might want to wish to sell up. So we know that land's been a fairly stable investment, and there's definitely decent tax relief as it stands. Funnily enough, I've just recently, as of about 4 hours ago, released a blog around about what I think about the prices and the possible tax impacts and tax changes. But I think that could also be quite a good idea for another one of these podcasts.
Excellent idea. You are getting us ahead of yourself again, Laurie, but a good advert there and a good plug for your own blog. So well done on that. And again, you can find Laurie's blog on that at larking-gowan.co.uk on our website. Right. So, Laurie, concluding on what we've done today, what's the one big takeaway that you think that listeners should reflect on?
Well, the Agricultural Act 2020 is here. It's enacted. Let's just get on with preparing for the future.
Yeah, and Laurie's here. You can contact him if you want any questions. So I guess that's a good point to end on, Laurie. So I'd like to say thank you to the listener. So thank you, listener. You've been listening to me, Chris Scargill, and him, Laurie Hill. This has been a MHA Larking Gowan Brexit bite-sized podcast, and you can find out more information about what we've been talking about at the website larking-gowan.co.uk. Thank you much for listening. Right, Laurie, let's talk about this next.